Friends, please switch on your video. All four of you, I think two or three of you at least. Friends, please switch on your video. All four of you, I think two or three of you at least. What YouTube live is going on me only. Friends, please switch on your video. All four of you, I think two or three of you at least. What YouTube live is going on me. Want me to go? Hello all, welcome to the perfect recipe for retired series again. And I think it is a perfect setting in the market today. We are all waiting to understand how markets behave. Let me start with my introduction first. I'm a fund manager based out of Mauritius. I run a company called Client First Capital. I'm very much thankful to all the participants who have come to help and ask questions on behalf of our investors and the investor fraternity. Mohan, Neeraj, Anjush, Ravi, thanks a lot for being here. I think, Mr. Sajid, I think each one of you are an investor and all of you have lots of questions. I'm not promising to answer all of those questions. I also want to tell you there is only one expert here, which is market. So market is the only one which is expert, and we all are going to be humble by its experience. When the market rises, we become a star. When market goes down, we all goes under the drain. But what I'm trying to say here is, let's not try to understand the market, but let's see how the question and answer session goes. So we continue to do these sessions. You will find various YouTube recording of our previous sessions, where our whole idea is to help the investors to understand how they can make their money. Before I start the session and invite my friends to ask questions, I would also like to congratulate each one of you for the Chandrayaan-3, which is going to the southern side of the moon, where no one else has ever gone before. And only India is the fourth nation, one of the fourth nation to land on the moon. However, yesterday, if you see, the miracle has been performed from the Indians' ground. But do you think this is just a very good timing, or do you think that ISRO has taken 54 years when they were founded in 1969 for this mission? Similarly, in investing, the best of the returns, as Mangar also accepts, happen from third year onwards. And if we continue to look for returns in terms of multiples rather than percentage, it's a very good point. My friend has given me this line. I'm very thankful to him. So I have always been telling everybody that don't think in percentage. When you come to the stock market, think in times. So how many times I've made my money, and that's how we will be patient. And the patient will grow because of that small tweak in our mind, and we can actually make generational wealth. A very good word, again, from a friend of mine, generational wealth. Now, Warren Buffett also quote, if you can't stand 50% of paper losses on your stock, stay away from the markets. So that's a very good point, that even as a fund manager or as an investor, if you're investing and if you have a 50% loss in the market, stay put, because you are not alone. I have various times have stocks who have gone 50%, in fact, 60% down in my investing journey. Stay put. Don't be fearful. Warren Buffett also says that equity is not for the faint-hearted. I've also asked, and I'm going to share those views when we talk further. I've also asked Mr. Vijay Kedia, who educates people with his songs on the internet and the YouTube. He is beautifully educating all of us how to invest correct. Christopher Mayer, who wrote 4 fantastic books, and one of the very famous book is 100 Bagger to 1 by Chris Mayer. He's based out of US. and he's also somebody who is like I am like him, I'll say, and he also has a good track record of investing money. I've also asked my good friend Tahir Badshah. If you know Invesco in India, he's the chief investment officer of Invesco. I've asked all of them two simple questions. Do you think we are in a bull run or in the last stage of the bull run? That's the question. And I've also asked them a very simple and thing that how do we do stock market timing? These answers I will give you before we wrap up the session. But this is the time for me to welcome my friends who are being from various part of the India and Dubai. Let them ask questions to, and let's see how it all go about. Mohan, I think we should start with you because I think you have very good, interesting question in today's time. Are you ready? Go ahead. Hello, Mohan. Yeah, go ahead.
Yeah, Bhuvan, hi. Am I audible?
Yes, you are.
Yeah, sorry. I was having some issues with my audio. So, Bhuvan, thank you for allowing me this opportunity to come on this live Q&A session. And it has always been pleasure to talk to you because every time I speak with you, I learn something new. Bhuvan, while I have been investing myself, my journey has been quite fruitful so far. One thing which has always kind of intrigued me is about the timing of the market on which you have this Q&A session also. So my question to you would be, most of the people think that when should we enter into the market so that we time it in a way that we start at the bottom and we get out at the top. But my question to you is to find out the froth in the sectoral picks. Like what has happened in 2 years back is that we had seen some chemical stocks going into 20 times, 30 times in say 3 or 5 years only. And it was happening across the segment. It wasn't happening to a particular stock because someone can have an outperformance or an excellent pick at the right time. But it was happening to almost all of the stock, and people started getting into the chemicals. And then suddenly there was this dumping of chemical stocks coming from China and other places. And for the last 3 years, they have either remained flat or have corrected like 50 to 60% from their top. So my question to you is that how do we identify those sectors where that froth is building up, and so that we, even if we are not getting completely out of that, but we book our partial profits, so that some money of ours is safe with us. Because at the end of the day, they say that the only money that you have made from the stocks is the money that you have taken home. It is not the M2M profits that shows that my stock is trading at 10x or 15x. But if it corrects 90% or 80% from the top, then you are actually looking at a flat return. So how do we identify those sectors where the froth has happened so that we don't get stuck for the 3-4 years period like it is happening in the chemical sector for now? The other question may be that how do we get into a stock where the bull run is about to happen? But that is a question which everyone will ask. But my question is on the first part, that how do I get to identify those sectoral churns that will happen? Yeah, thank you, Bhuvan.
Well, thank you for the long question. I think let me first tell everybody that what the question means. There is something called stock market timing, and there is something called stock timing. My good friend Tahir Basha says stock timing is more interesting than the stock market timing. Now, why does he say so? Invesco, as an investment house, my experience with them is of investing myself, and also many of my investors have invested with them. They're value buyers, and from their language of value buying means they buy a company of worth $100 at 60 or 70, assuming that when the company will become $100, they don't know whether it'll become 200 or 300, but they know for sure that the company is worth $100. So they buy at 60 and 70 in the hope that they will make 30 to 40% or 50% return in the next 2.5 years or 3 years. And that's what the stock timing is. Stock timing can be done. Now, coming to Mohan's question is about how do I sell safeguard myself against the sectoral rotation. And here is a sector called chemical sector, which has gone through a 50% bust. And how do I save myself from that? So first of all, one very common thing, Mohan, I would like to tell you here and to all my audience, and I've been in the market asking investors to fund. And in my humble opinion, we are in the bull run, just the early stage. But you will find that a lot of investors are still not happy with what has happened last 2 years, or let's say 2 years before. Now, between May to November 2021, in the Indian market and in the US market, there was a froth. And what happened that we were getting the money even when we were not telling the investors to anything about it, because we are not a timing investor who does timing. So what has happened is people used to send the money first and then give us a call saying that we have sent the money. Right now, we at least get the call first and then the money comes. I am going to tell about the sector rotation, Mohan, with the behavioral aspect. So when you see the crowd is holding on to some sector, that is the time you need to be away from the sector if you are somebody who keeps buying and selling. We do not have the sectoral, allocation per se, but what we have seen in the last 10 years that the IT, healthcare, and the consumer discretionary, these sectors are evergreen. Banking are okay. One has to accept the bank like HDFC Bank. I think one has to time the banking stock. Now coming to the timing, we have to understand how the sector functions. For example, today markets are beginning to be bullish. The greed is just starting to in our mind. This is not the time to own a utility or a consumer staple stock, or let's say pharma stock. So I know a company called Sartorius Biotech Stadium. We're still doing the research, and I would like to tell all my investors here that this is an educational show, and nothing what we're gonna discuss here is a stock investing advice. Please consult your financial advisor for the stock invest or any investment advice. This is purely for educational purpose. So if you look at the healthcare stock, Mohan, you will find that they are right now beaten down, because we go to pharma, we go to consumer staple when the markets are absolutely fearful. So how do you know that these sectors are the right place to get into? When the economy is not in the good shape. Right now, economy is becoming better day by day. Now, coming to banking, how do you know about banking? The banking is an interest rate game. Whenever the interest rate cycles are peaking, because the bank's job is to lend money. And to lend money, I need to have the net interest margin at a very high percentage. So whenever the interest rates are high, it is a time to be into the NBFC and banking business. But having said that, Mohan, if you have invested into stocks which have a very good return on equity for the financial stocks, and they have a good net interest margin with a very low NPA with a 10 to 15 years track record, this is not required. But having said that, yes, even HDFC Bank in the last 2.5 or 3 years has been very stagnant. Now interest rates are going up. So in general, the banking sector, as you also I think know pretty well, that they are doing great. But still there are 2 or 3 companies because of the individual reason might not be doing good. So in my opinion, when you see a crowd, when you see the price to earning, because in the portfolio, price to earning works. On the individual stock, price to earning does not work. So when you see the sector's PE is all-time high, that is not the time to be with that sector. Right now, for example, the manufacturing is booming. You still have some time to be in the manufacturing sector. But very, very simple, whenever you see that everybody's talking about that sector, you should be away from that one. The second is you should read these sectoral books by Philip Fisher Institute, which has these books about oil, utility, finance, consumer staple, and they have very well told you how the cycle works. So today, if you see, healthcare is a great place to get into if you would like to be into the sectoral rotation. Because right now you're feeling good, we don't work, because right now we are looking at consumer discretionary. We are not looking at, for example, the consumer staple. One more sector, auto. Auto is also now maybe in 6 months it will be peak, and then the whole cycle of auto will be actually, I think it'll be a very bullish, and then we have to sell. Similarly, banking also, I think the next 6 months is a time to get out from the banking, if at all somebody. Now, who does all this kind of investing? Very big investors, mutual fund investors who have to buy and sell. We do not really have a lot of experience, but we have seen this is how it works. I hope I answered the question.
Yes, one, this pretty much covers it, and you have also kind of given the hint on the sectors which might have peaked or might be closer to their peaks in coming days. So thanks a lot, Bhuvan.
Most welcome. Let's move to the next investors, and let's see what we have in the store. Neeraj?
Thank you, Bhuvan. Bhuvan, my question is, when does one realize that a stock has reached its peak and it's time to exit? How does one time that? I mean, I know entering is something that everyone asks, but while one is entered, how does one then keep on monitor? And although everyone is probably here into long-term investing, but probably there are, there are going to be times, or there could be some specific situations where probably something is going to go wrong, or there are signs which indicate that something is going to go wrong and it's time to quit or take an exit.
Neeraj, thank you for the very good question. I think it is something what he is asking is how to sell right. It all depends on the individual journey. So let's say when I invest for 10, 15, 20 times in the stocks. And if you are investing in a cyclical company, I just answered it that when you see the interest rate cycles are peaking, which is like roughly 6 months to 1 year from here, the time to sell a stock. But when you're buying a quality stock like Apple, Google, Microsoft, or these kind of companies, it's very hard to sell. In fact, you should never sell. So the only way to understand the sell, to whether you should sell or not, when you see a disconnect between the price and the financials of the company. So let's say, what is your objective? It all depends, Neeraj, what's your objective? Your objective is to make 50%. And if the 50% is made, you come out of it irrespective of what stock can run. If you are somebody who reads financials and you can see the earning growth of the company and how it is being rallied, then you might want to stay long because you're seeing that the company's earning is growing. But even after that, the fundamental of the companies and the share price can be disconnected for roughly 3 to 5 years. So this is a very common phenomenon, Neeraj. We all have to live with it. There is no perfect answer to it. But all I can say is that one is the desired return. Which kind of inning you are playing? Are you playing a T20? Are you playing the one day, or are you playing the test match? If you're playing a test match, first of all, don't have the stocks in your portfolio which you have to buy and sell. So in the words of Chuck Akre, who manages $17 billion, says, every sell is a confession of error. I repeat, every sell is a confession of error. So we need to buy stocks which we do not need to sell. But yes, all of us, when we'll sell, it will be a 10 to 30, 40% loss from the peak. So imagine you have a stock where you have made roughly 100 times or 30 times. And when you sell it 30% down, you are still making a lot of money. So only buy companies where you would like to have 5 to 10 times of return. And even if your timing of sale has gone wrong, you will still be making a lot of money. This is one answer which I think of. Very difficult it is, as you rightly said, we all want to buy low and sell high. But this is not something which can be done unless and until, because even the companies don't know. In fact, Neeraj, any stock which you see in the market, very few people think about 1 year or 2 years. So any stock which you're seeing right now, like Apple, when it was not even selling iPhone. So even they did not know they will sell iPhone, because all the success they got in the early stage with iPod. And today it is not only iPhone, they are selling Apple services. The Apple store is very big hit. So even the company does not know. So one has to be very, very sure of what companies do. For example, Tesla. A lot of people say about electric car, Tesla is reducing prices, but people don't understand that Tesla might not be a car company alone in the next 3 to 5 years. So the stock could still be disconnected. If you would have sold Tesla, let's say a year ago, you might be happy right now. But having said that, in the future, Tesla might be a great stock to hold on because the story will change. So the only way I will say, avoid the stocks which you need to sell with a low return. If you are really keen on selling stocks after a time because you just think that you want to buy something else, then buy stocks where you think you can make 5 to 6 times. But at least give your story to play, at least give it 3 to 5 years, else don't get into the stock. Because technical, fundamental, nothing works in the short run. All this politics and this Russia thing and all, they take over. A long answer, but I hope you got my view.
Sure. Thanks, Bhuvan.
Thank you. Anjush?
My apologies. There's some problem with the video, so I'll not be able to switch on my video. Having said that, it's a little different question and a little difficult for the audience, but I'm sure Bhuvan will be able to answer this. And I would request my fellow participants to come across and help on this particular part. So what we have seen in the last, should I say, 15 years, specifically after the 2008 Lehman Brothers crisis, is that there is a massive dose of liquidity that has been flooded by the Fed, both after 2008 crisis, which was in 2009, and then in 2020 during the COVID crisis. Now, if you look across immediately after, it appears that the markets went across completely on steroids, given by the fact that there was a massive liquidity that came into the markets. Now, this liquidity in itself is creating some amount of problem for the US markets. So it's like riding a tiger. You can't get get down the tiger, and you can't keep on riding it. But there will be a point where US will have no other option but to basically take a call on that point, because otherwise the kind of problems that it is going to encounter even for its own currencies are going to be massive. Looking at some of the reports that I read recently, the interest outflow per month right now for US is close to around $900 billion. And it's the way the interest rates are going up, it can be $1 trillion sooner than later. Now, my question to you, Bhuvan, is that now with this massive amount of liquidity that has been pumped into the markets because of crisis that have come across, how do you see, because a lot of this liquidity will completely distort the fundamentals basis on which the stocks are selected. Do you see that as a problem? And if yes, how you are looking to solve it? And finally, do you see this liquidity getting truncated in times to come?
So, Anjush, a very good question on the liquidity side. 1950, the Fed was formed. And before that, there could be a bear market for a very long period. But we have seen that from the 1950 onwards, the bear markets have been shrinking and the bull markets are raging. So what happened is you have a very short-lived bear market, like just now we had in November 2020. I think we had just hardly not even 1 year, one and a half, maybe it lived, and then we have a fantastic bull market now. And again, we are worried that what will happen to the liquidity. As you rightly said, that the Fed is raising the interest rate. What we have to not forget that 1950 onwards, they have infinite power to print money. Today also, the Indians die to go to America. As we talk right away, I'm sure many of our investors are still thinking to settle down in America, because the what kind of a comfort in terms of the lifestyle it provides and the opportunity it provides. I've been to America and visited my friends. Overall, on the life perspective, they're very happy. I'm not saying that India is not great and people have not come to India and not flourish, but overall, an average person with $1 million to $10 million love to be in America. And America is the only nation which has adopted all of us. Today also we feed on America. So let's say if America is not the first choice, is the China a choice for us? I don't think so, because China, I don't think that it is very much open in terms of we going there and starting the business. In fact, the last news I read that the last journalist on Chinese, the last Indian journalist on the Chinese land has been told to leave. So how do we trust? Whom do we trust? That's the question. So I really don't have to solve this liquidity issue. Anjush, what we have to understand is that we as all countries who are supported by America are feeding the American interest rate, feeding the American liquidity. When I keep my money, if I don't do it, but I'm sure 90% of us, when we keep our money into fixed deposit in the bank, that money goes to the RBI. RBI keeps that money in the federal government, with the federal government, and eventually we all get the currency depreciation. Yes, maybe the next 10 years, we will not have that kind of depreciation, and we might have a China model where Chinese currency is not depreciated in the last 10 years. So liquidity is going to be pumped up again. This is a very sad reality, but I think the government runs when the public is happy. I think day before yesterday, something, Biden has cancelled the student loan of 33 billion odd or so. So we are again in a somewhere left pocket, right pocket thing. Liquidity will come in more tranches in a different manner, and we will soon come back to QE. We just now saw what happened. The Credit Suisse has been funded. The Silicon Valley Bank has funded. We just had a big crisis 6 months ago in March, so 3.5 months ago, and then we have the raging bull market right now. So I think Adarsh, the liquidity is something which we cannot understand. All we can understand is that US government has infinite power, and that power is not going soon. Whether it is cryptocurrency or India coming and saying that we will take care of it, yeah. But it is slowly and gradually a sinking ship. Who knows, it will take a year, it will take 10 years. But if we buy quality companies, we can avoid this, because these quality companies are not only doing business in the US, they are doing business across the world. So the only way to protect ourselves against the dollar fall is to buy great companies which have sufficient business across the world. I hope I answered you.
Now, allow me to have another leg to this particular question, which actually emanated from the answer that you gave right now. The very fact that there are enough and more countries that have started ensuring themselves against the backdrop of what US did, specifically with the Russian money, in particularly after the Ukraine invasion of Russia, as people may say so. A lot of countries, including India, have actually stopped subscribing to the US securities, Fed securities, if I have to elaborate a little more on that. And in fact, some of the reports that I was reading of lately was like, US is this time finding it very, very difficult to get its securities sold to other countries, because all the central bankers, in fact, the Brazilian president, Mr. Lula, came across on that particular interaction with Xi Jinping and openly said that why is it that each and every trade has to happen in dollar? Now, I completely agree to you that US is definitely a sinking ship, and I more than 101% agree with you that one of the biggest ways to look across protecting our money is towards getting more and more invested into companies which have global presence. Amazon, for that matter of fact, or Tesla, as we may say, Apple, or because these countries are not only catering to the audience of US, they are actually catering to the audience of on the global scale. Having said that, the very dominance of dollar, if we have to call it that way around, is now being challenged. And I completely agree with your view that China is definitely not the second, is not the alternative to US. Pound is definitely nowhere in the picture. Euro is having its own set of problems. India is not ready to take over the baton yet. Eventually, it's definitely going to be gold. That's what we have been reading. That's what we have been understanding. Having said that, gold investment will never be as lucrative as equity investment would be. But we really do not know as far as how the liquidity will actually get into it, or there will be some other problems. My only question to you is that, do you see that as a problem in the next 2 to 5 years? Because when we are looking across on that, even by the companies like Amazon or Tesla, if there is a de-dollarization of the world, as what we are reading right now, these companies definitely will be impacted. So do you see that as a problem in the next 3 to 5 years? That's the only question.
I don't think so, Anjush, will be a problem in 3 to 5 years. One, I strongly believe that the CEOs are very smart. And if they can't make money in American market, as we already seeing that they are trying their best. See, I'm sure you agree that we were not when I was a young child, I was not even having Maggie. I did not even know what is a Chinese food. And slowly and gradually, the whole Maggie food came in. You know, the FMCG giants like Unilever and all, they 10 years, they feed us for free. And then in the 11th year, they make all the money. So we're still wearing those American shoes like Skechers, Adidas, the Reebok family, and let's say the Nike. So I strongly feel that leave this macro out of it, because nobody knows. It's great to talk to the investors that we might know something about the macro. Nobody knows. The Russia war, when it will be over, nobody knows. These are the questions. Good to just read it and have a view, but we have no idea what. So we have to focus in the fewer variable, and the fewer variable are in the investment. For example, you said gold will take over. Gold has a portability issue. Gold will not take over. Gold is good when you are fearful, but gold cannot be a currency again. So all I'm saying is, in the whole this equation, whether 2, 3, 5, macro is not in our hand. Let's not worry about it. Let's focus on the great companies. Let these CEOs tackle these problems for us, because they are pretty smart. For example, Chinese are selling to the world, right? We are not able to sell to China, but Hikvision camera is across the world being sold, whether it is UAE municipality or the Middle East and Europe. So what I'm trying to tell you is that the particular company coming from a US market is not important. You saw how Elon Musk saying in China that I'm a communist. So the smart CEOs will be able to handle all these things. So let's focus and be partner with these companies, and let's look at the micro and not the macro. That's what my suggestion is.
Fair point.
Thank you. We can move to the next participant for question. Mohan, Neeraj, Ravi. So till you're taking the time, I'll just read out. So when I asked Mr. Vijay Kedia about are we in the bull market or the bear market, he said we are neither in the bull market nor in a bear market. We are in the stock market. He also said the bull market is like a sunshine. It's always there somewhere. It is just that we are not aware of it. I also asked him a very beautiful question about the how to time the market. And he said only two people can buy at the bottom and sell at the top. One is God and the other is a liar. So it's coming from somebody who is managing his own 1,000 crore. And he's saying that let's not waste your time in finding out whether we are at the bottom or at the top. It is somewhere there, we don't know. When I also asked this question to Christopher Mayer of Woodlock family, who I asked him that are we in the early stage of the bull run or in the end stage of the bull run? And he clearly said, I have no idea. Nobody knows. And I think it's a waste of energy to think about the question. So friends, if you're thinking about the bull and bear market, I have read out two expert views. I still leave with one more view, and I'm going to finish my presentation with his view about the stock market. Now, coming to the timing, Terry Smith said that it's a very, very difficult. I am sure every investor wants to buy low and sell high, but only few can do that. And specifically, the individual investor might do it, but emotion comes to play. So the advice we got from Christopher Mayer is don't time the stock market. It's too hard, and the odds are you won't be right often enough to justify the expense and trouble. So the timing question and the bull and bear market question, we have two experts answering. I will read out the question. I think I have the questions ready for you. So the question has come to me that some mutual funds are holding 15% cash while others are almost fully invested. So, and they only carry cash to meet redemption demand. It is very difficult for me to comment on any mutual fund, why they keep 15% cash or why the others only keep the money for redemption. Let me tell you, there are restrictions on the mutual fund. So mutual fund managers have to behave very differently. What I know in the Indian context is any mutual fund cannot have a stock allocation of more than 5%. Let's understand what is mutual fund, because all our audience today is listening to us. they invest into mutual funds. Mutual funds are a retail investment product. A retail investor who would like to do an SIP of 500 rupees to, let's say, 1 lakh or 2 lakh rupees a month to a year, mutual fund is very suitable for them. I always tell my investors that instead of fixed deposit, you should do mutual fund SIP. So FD does not make money, except keeping some money in there for the rainy days. The rest of the money should go into the mutual fund, whether in the SIP. And when I say mutual fund, it should be an equity mutual fund because you already have the FD to take care of for the rainy days. Now, mutual funds are a retail investment product. They're very tightly regulated by the regulators. And the moment you have more than 5% in one company, you need to cut that position. It's very sad for the mutual fund manager to reduce the exposure in a position which is going up, because that's how you will make a lot of money. But since it will also increase the risk, that is why they behave in a very different manner. So they have to buy and sell, buy and sell. So now 15% is kept by a lot of investors, mutual fund, because they always try to even average out their buying probably. And the mutual fund managers who do not keep the cash, maybe they think like me, or maybe think like Ramdev Agarwal, and they keep on investing the extra float till they have the redemption. So that could be the reason, in my opinion. Friends, if you are alive, please, if you're there, please ask your question, and I'm reading a question. So, coming to the price to earning, I have a very good question here. Is that what parameter should we look at various sectors, as P might not be a criteria to buy a stock? It is perfectly a very well timed question that price to earning is a flawed indicator. In fact, Terry Smith in his book beautifully explained that if you would have bought high P companies, and after 10 years, when you see the return, they would have done much, much better as compared to the companies which you have bought at low PE, because price to earning is being seen by everybody. The basics everybody learn when they come to stock market is price to earning. Price to earning can be flawed because you do not know how the earning has come. Is it a one-time earning? Is it that the earning is very suppressed, or is the price is very, very high? You may not know it unless you look at the average earning. Even in the context of the S&P 500, if you see, S&P 500 is made of this 7 tech stocks and the 493, the remaining stocks. And what happened when the S&P runs? First, these 7 companies run, and again, the average is skewed. So what you can do is you can have a Shiller PE the way we have it for the index. You can also have a 10-year average of the earning, price divided by 10-year average earning. That is one criteria when you're buying a stock to understand the valuation. The second you can do is enterprise value by EBITDA. But all these, before you do, you need to understand what kind of cash flow these companies will generate in the next 10 years. So discounted cash flow is a great method, but before this method also come in, you need to know what the business will look like. For example, if you are somebody who does not believe in future and just going to the Excel sheet and just extrapolating a 15%, 20% growth for the next 5 or 10 years, can give you any price you want. That's what Warren Buffett said, that even the intrinsic value calculation is an estimation, and it is still a speculation because I don't know what the business is. So the first important thing is one has to know the business, and once the business is known, what will happen in the future, and then based on that you can calculate the discounted cash flow, and then you can time your buying. The second way is what Peter Lynch told us, that whenever you buy a company, if the PE is lower than the earning growth of the company, generally the stock is undervalued. Having said that, you don't get even quality stocks of those kind of valuation right now. The great companies are running at anywhere between 30 to 50 PE all the time. Like Asian Paint today also is running at a PE of 50. One more problem with the PE is it's a trailing PE. Whatever PE you're seeing in the market, or let's say in the ticker or in any website, it's all trailing PE. Now understand what is price to earning. Price to earning is basically I paid $100 price and I earn $5. That's how 20 PE. So 100 divided by 5 is 20 PE. But let's understand that you are paying 100 today. The earning which you're seeing is the last year earning. If the company can double the earning next year, which is happening in a lot of Indian companies and a lot of high growth companies, then your PE of 20 will eventually become 100 divided by 10, because this earning will become, let's say, double or 7.5, it goes by 50%. So your P of 20 will come to 10 or come to 15. So what we have to understand, that price to earning alone will not help us unless and until we understand what company is doing. So discounted cash flow is one method which can help us out. The Peter Lynch method, that the earning, if the price to earning is lower than the earning growth, that can help us out. The third method is where private equity companies uses enterprise value by EBITDA. Generally, anything enterprise value divided by EBITDA of less than 6, which I think I also use it to buy a company called Denosh Shipping, because the enterprise value consists of the cash and debt also. Because when somebody is looking at the company, he will look at the company as a whole and not just the equity. And the EBITDA also takes care of the interest component, the amortization and depreciation, which is not there in because you can always play with the profit or the income statement. So that is another method of looking at it. The very simple method I will tell you is how to look at whether this stock is a good buy right now, if the promoters are buying. So I had written in one of my letter in the last, I think 1 year, that promoters are buying. So last year, a lot of promoters have bought their stocks. And that's one of the great time, not necessarily, but the only reason why a promoter or a company will buy back their share is because they are very much bullish about their stock. Like Sketches, for that matter, has bought roughly at $40. They bought their stock. So that's a great way to also know whether it's a good time to buy the share or not. For example, Sartorius, which is the company we are researching on, please don't buy it, I request you. It's only a research which we are doing, and it is in the healthcare segment. And the company has also gone down and is still not up, which is the answer to the Mohan's question, that healthcare is a good place to get into, and this is the biotechnology company. And what we have found when we were reading the annual report, that they have authorized the buyback. So that's also one way of understanding how to buy right. Now, a lot of people tell me, so I'm switching over the topic now. A lot of people tell me that when I give you money, you just invest. No, that's not the thing. When you give us the money, we prefer to buy low, but we not necessarily sell high. So there could be a soft close in the fund, which is not the case scenario right now. So what happened is, we all should buy low, but we should not sell high. Now, how do I give you an example here? All the promoters who are running their company for the last 10 to 20 years, they sell a very small component at the high, if at all they need money, but their buying price have been very low, or they will buy their stock when it is touched low. Now, how do I give you another example? Facebook. If you saw Meta, where Mark Zuckerberg has bought some $70 billion odd shares, and it's a live, it's a real life story where one of my investors who bought Facebook at a high price, and then it went half, and then when it went 20 or 30% up, he sold it, thinking that it will again come down and go up. So what you should understand, buy low, don't sell high unless you know the business. And for that, I will quote Saurabh: do not attempt the stock investing on your own. Saurabh Mukherjee of Masters Investment: do not attempt the stock investing on your own unless you read 3 years to 4 years of financials. Because even in my experience, it's very easy to say that the way Peter Lynch has told, that any of us can buy a stock because we are going through that life journey. For example, if you love Britannia biscuit, a good share to buy, let's say Asian Paint or Kajaria Ceramic. In the American context, it could be as good as, for example, you can buy Lotus Biscuit in the European context. You love a game, let's say it's a company called CD Projekt. You can buy that company. But what happens, since you have not gone through it, you have not understood it, you will not be having confidence to buy a lot of quantity of these shares. That is why it's very important to understand a business before we buy them. I gave you some good criteria to figure out whether you are buying low or not. Friend, do you have more questions?
One small question from my side, Bhuvan, if we have time.
Yeah, we have 20 minutes. Yeah.
Now, you recently talked about right now on the PE ratio, on understanding a stock. Now, PE ratio, as per some of the investment gurus that I've been following, is not the only criteria to look across the stock. Perhaps it is one of the 10% of the criteria. Apart from the PE, definitely during my discussions with you, we've talked about ROCE and ROA. Apart from these ratios, and definitely what the promoter has been doing, right, like you right now mentioned on Mr. Mark Zuckerberg buying its own company's shares when the world had actually written him off, in a way, right? That instills a lot of confidence. But what are the other factors that you look across before you zero down on a stock that, yes, these are the 10 ticks that I would look across into a stock before I would actually even consider it to be worthy of being in my portfolio?
Okay, so I think it's straightforward. You're asking how I do the scuttlebutt. So Ajit, thank you for the question. It's my bread and butter. Every day I do it. It's very simple. I have very less money. Let's first of all accept, all of us, let's accept we have a very less money. We are not having billions, etc. And the stock market is in trillions. The stock market of US itself is more than $23 trillion kind of a stock market. So when I have a very few money, let's understand that investment has one more word coming from the same root called investigation. So as a stock market investor has to be an investigative person. He should spy and he should keep rejecting. When
that's really, really interesting.
Yes. So what happened? We are very emotional. I know for a fact some people, I even utter a stop and they bought it. They don't even wait. I need to complete and they just bought it. People crave activity. Humankind crave activity. I've said this earlier also. We think that Bhagavad Gita is promoting activity. Karmanye vadikaraste ma pharju kadachana. But Bhagavad Gita is not promoting activity. It is promoting neshkarma. Bhagavan is saying that even surrender your action to me. That is why Warren Buffett says, my mantra of success is 2 good decisions in 5 years. Similarly, people who have failed here, they are the one who are craving activity. The lesser is better. Active fund management doesn't mean I sit on the system all the day, looking at the stock prices and technical and fundamental. And I've also been, a lot of time people blame me that you're an expert, you should know when to buy the stock. And I always tell them, I always tell my investor that I understand the business, but the share market, I don't want to understand. Share market is here to serve me and not to guide me. The one good thing about the Mr. Market, it comes and give you price every day. If it is very happy, it'll give you a very high price. If it is very depressed, give you low price. But the good thing about the Mr. Market is if you will ignore him today, he will not feel unhappy. He'll come again next day and show you the price again. So that is why be away from the system. If you are an investor in the Indian context, please dematerialize your share and close your brokerage account and keep those physical share with you. It is much better for you because this is the noise in the market which is giving you trouble. And that's why I've seen this in America. Some of my mentors, my seniors, they stay very away from the Wall Street. And I always tell people that there is a reason why Warren Buffett did not leave Omaha and went to the Wall Street. Now, coming to my stock ideology. So I am a spy. Anybody who gives me a free stock, my antenna raises. Oh, why is he giving me a free stock? Because please understand, internet is also all about sell. 95% things in this world is, but Morgan says very well that everything is a sell. So whenever somebody is selling me a share, buy Zomato, buy Nykaa, or Nykaa's IPO have come and this and that, I don't pay attention. Now coming to the stock, very simple. Life has to be lived with simple principle. What is the simple principle? Eat on time, have a restful sleep, take care of your health, and periodically take the rest and keep learning new things. This is all my CEO and owner friends, they do in their office and their workplace. If you do the same thing on your investing, how will you do the investing? I will have few investments. I will not have a lot of investments because I cannot manage it. So let's not have a stress of 20, 30, 50 stocks or 20, 30, 40 houses. One should restrict themselves for not more than 10, 15 products, or let's say 10 to 20 stocks. The second thing, or if you don't want to buy stocks, don't buy. Buy 10 good properties at a good price when the markets are falling. Now, the first thing is simplify your life by writing the checklist. The second thing is, I will not take debt in my life. I will not take debt on my investment. So I have never taken much of a debt in my life, and I'm sure people who are alive and watching my video right now, they have also taken less debt in their life. And since we have taken less debt in our life, let's find companies which have zero debt or low debt. Then let's look at, are they making money? Because for me to become a millionaire, the promoter has to become a billionaire. Now, does he have that urge to become a billionaire, or has he already become a billionaire from the, let's say, from the last 10 or 15 years when he was there? So I will look at a company which has a return on capital employed, in the case of non-financial company, of 15 to 30%. Because if my promoter is not making money, I make money is a coincidence, just a matter of chance. And after that, I will see whether he is able to grow his top line by 10% year on year, or let's say not year on year, CAGR. If he is doing so, I'm confident to even look at the company. So Pulak Prasad said a very good line, and I think I would like to quote that. Pulak Prasad, who is the author of a book now, What I Learned from Charles Darwin About the Investing. Let me quote him. And he talks about this good, gruesome, and the bad companies. And I think this is absolutely right for the answer for Mr. Anjush and all of us. So there are bad companies, there are good companies, and there are great companies. And we need to just understand this. So he says that we want to be permanent owners. We don't invest unless we think we can own a business forever. A bad business that is dirt cheap, pass. A mediocre business at a low price, thanks, but no thanks. A high quality business at a fair price, give me more so I can never let go. So whenever I discuss stocks in my shows or my channel, I always talk about the quality companies. And once I am very sure of the quality financials, then I look at the promoters, then I look at the moat, then I look at how company earns their profit, and what are they doing in the future. So R&D is now a must in all the companies, because the way we are buying is changing, and selling cash, selling online, these are some other criteria. This is a very 1 hour will be smaller for to know to all about the stock investing in terms of how founders portfolio and how client first capital work. But this is prima facie what we do. I hope I answer your question, Anjush.
Yes, you did. Thanks, Udan.
Do we have one more question? We think 6 to 7 minutes more to go.
Sir, I have a question. I actually sent you some of my questions, but I think Mr. Anjush helped me answer most of those questions. But I would still have your perspective. Maybe it will help me to understand even better and deeper. So, markets are at an all-time high, whether it is developed markets or in emerging markets. Do you still recommend to invest right now? Because as you mentioned, that it is good to exit at the right time, and buy at the at the time when it
I
is.
to see you actually, and I just want to know whether you're talking about the property market or the stock market. Property market, I agree.
No. I'm talking, sir, even about emerging markets, whether it is India, whether it is Nifty. In that case, so my question actually that I sent you, and you have already mentioned that. I think Mr. Anjush, thank you so much for even raising that question, so that I actually had a fair understanding of that. The Feds have confirmed that, sir, they will go ahead with 2 rate hikes over the next, before the end of the year, they will have 2 rate hikes. So since the monetary policy would be tightening and the liquidity would actually come down, do you still understand, you feel that the stock markets would go up, whether it is in developed markets or emerging markets? And coming to layer 2 of this question is that, as sir, you are aware that US has sanctioned Russia and Russian products. Like, even if it is geopolitical or macroeconomics, but it still does have an impact on the markets. Like history has been like, evident about that fact. So since it has sanctioned Russia and Russian products, but it has not sanctioned the Russian nuclear fuel, do you think that, as Russia right now is planning to increase the prices of nuclear fuel that it is selling to USA even after the war or even before the war, since like it is the part of the agreement of the megawatts to megatons agreement that they had entered 20 years ago. Do you still think that it will have an impact, sir, on the US markets, as it might lead to recession because energy prices will raise?
Fine. So I think it's a long question. I think there are two parts. One is the nuclear
Yes, sir.
fuel prices can go up because Russia is under the sanction and they are still selling it to America. That's what you are telling me. One. The
Yes.
second, you're saying that all-time markets are all-time high. Do you still recommend to invest? Correct.
Yes, sir.
So first of all, thank you. I've been seeing you. You are the one of the few person who has been going to our letters and still trying to figure out. And you're also an investor on your own, so you always would like to learn about it. I have only one suggestion, Ravi, is that start reading the books also, because macro is not in anybody's hand. Because Putin is not my friend. You know that, right? So the problem is he will not tell me when he'll action. So if you remember, a few days ago there was a coup, right, in the Russia. And I was like very surprised what has happened, that all my friends have been praising Russia about this because somewhere they feel that Russia is correct. And there are other opposite views also. I'm sure the European countries and the Americans have a different view. But then immediately within a day or within, I think, 1.5 days, the coup has been resolved. Correct?
That's correct, sir.
So you need to also know that in the past, America has attacked Japan and for the nuclear war. And today, Americans are being fed on the Japanese product. Correct? You also know that Japanese product, when the Ford 1928, when Ford was making this black color car like an Ambassador, which was there in every house those time. In the one, I think out of 4 houses, one used to have a Ford car, and they also used to have this refrigerator. And the Toyota started flooding the cheap cars. Are you aware of that?
I'm actually learning from you, sir, right now, because please.
So Toyota and Honda, they used to flood the US market with the cheap car, because after the World War, they realized that let us focus on the growth of the economy by being a business community rather than having our own big army. And these products were of very, very inferior quality. If you remember, 5 years ago, we used to say the Chinese, remember the Chinese goods were not that respected.
That's correct.
Today, the same Xiaomi or the Huawei or the Hikvision of the world are controlling, of the China are controlling the world somewhere. And the WeChat is one of the best software, and people love it. Without that, they can't, even survive in America. And the QQ.com, which is the Google of China. So what I'm trying to say, history rhymes. It comes back. The way Japanese products have become the epitome of the quality, like Toyota is great quality. Today, my friends tell me, Toyota will not bring the electric car unless they're very sure, because when they do it with a perfection. So everybody else will just bring in because they think that let's have a rush for the electric vehicle. So what my point to you is that I have no idea on what will happen on the nuclear fuel. But I can tell you one thing, you can stop worrying about it. Because this is not how you will be able to be a successful investor, because the stock market will always have something to worry about. Always. And the bull market climbs the wall of pessimism.
Okay.
But from your question, I can tell you one thing. You are still not making money in your portfolio in the last 2 years. It is just breaking even maybe, and you think that I missed it. Should I put in more? And that is not the question which you have. And I might be wrong in guessing your individual position, but that is what I'm seeing in the market, that everybody is driven by their immediate past. And a lot of people have passed the colleges and got job in the last 2 years from the bottom of the market, and they have no memory. And they are keep pouring in the money because they have literally had not seen the downs of November 2021, or sorry, the May of 2022. So
Mhm.
that's one question on the macro. Please don't even think about it. Nobody knows. Coming
Understood,
to
sir.
the stock market being high,
Mhm.
this could be the high of the last 10 years. But is this
Okay.
the high for the next 10 years?
Mhm.
So stock market is a futuristic business.
Mhm.
Past should guide you. Definitely there will be a crash. And I can
Mhm.
also assume that crash, you will be busy doing something else. Like today, everybody is busy traveling. They
Mhm.
all want to go to Europe and they're traveling and all, and they're not able to concentrate in the stock market right now. But after 6 months to 1 year, the FOMO will build up and they all
Mhm.
will start putting the money. So your question is very valid, Ravi, because this is the reason I did this show, that I want to tell
Mhm.
people that today is a last 10-year high. Today is not the high for the next 10 years. In my opinion, the bull market has just started. Still, there is enough pessimism in the market.
Okay.
And coming to the
Mhm.
Fed rate now. Now, please understand, the Fed keeps on increasing the rate because they have to tame an elephant called inflation. Ravi, inflation is good or bad?
Certainly, sir, it is bad for the consumer market in terms of masses, uh, and also for the businesses, because if the in at the time when any central bank, so especially the Feds, if they raise the rates, it becomes expensive for entrepreneurs to run their show. Interest cost and financing cost goes up, so their margins take a hit. Is the reason when they plan to, sir, reduce down their cost, and the most easiest way to reduce down their cost would be to actually plan to lay off people. So that's what had happened back in 2008, and which led
That
to,
happened just last year also, by
that actually led to the housing market crash, because majority of the people who plan to actually buy real estate are the ones who are middle class or salaried class, and is the time when usually capitalists actually go and punch in their capital to actually buy a housing market at that time. So I just wanted to actually, sir, understand this, like, is it going in the same direction? Because is there a changing world order? How Ray Dalio also mentioned that.
So see, those big word of changing, but the daily, the worldly order is absolutely something will change. 80, 90
Mm-hmm.
years things change, right? But
Mm-hmm.
on your question, I'm coming to you that if inflation is so bad, why are you not getting things cheaper right now?
Mm-hmm.
Are you getting the
Yes,
cars cheaper? Except the electric vehicle market where Tesla's reduce the price, this is also part of the strategy. Everything else is
mm-hmm.
costly, correct?
Absolutely right, sir.
So understand this how inflation works. This inflation which we have right now is a good inflation, because
Mm-hmm.
inflation is 99%, except the stagflation is the byproduct of the growth,
Mm-hmm.
and we're still in the growth cycle,
Okay.
right? And
Mm-hmm.
interest rates are being increased to reduce the inflation, and inflation has come down now. But the problem is Fed is not happy, and Fed is not happy because their what do you call, the owners, the government is not happy. And if they
Mm-hmm.
will not they will not increase the interest rate and bring the inflation down, the current government might lose the election, because the next government will promise that will come and reduce the interest rate and inflation. Sorry, right?
Absolutely. Absolutely right, sir.
So not all the entrepreneurs are unhappy. I am not unhappy, because
Mm-hmm.
I have neither I have debt in the portfolio, not in my life, not in my portfolio companies. So
Mm-hmm.
anybody who is not taking, and I think people are very happy because they're getting a higher fixed deposit rate, which is a mirage. I understand that. But
Mm-hmm.
the businessmen you might be dealing with are heavily leveraged. And they might
Mm-hmm.
not, they might be a trader where they have
Mm-hmm.
no command on the pricing. For example, there are various type of business, please understand. So Google, we're using the Google, Gmail server, the Google
Mm-hmm.
console. They have not reduced the price. Zoom has not reduced the price. Zoom keeps on offering the webinar for 50% free for the 4 months, but not on the Zoom. This Zoom room, which I'm using right now, has not been given a discount.
Mm-hmm.
Netflix reduced the price by any chance? Are you aware Netflix reduced the price? Apple
Yeah,
reduced
but
the price.
yeah, I think so. The impact, just help me understand, because you're an expert. I'm still trying to learn from you. like, in terms of the fact that this would only impact companies who are like, either in two phases of life. So like, whether they are planning to actually enter the market, whether to cash burn, how they say for startups, or either they do not have any leverage in terms of debt. Had it been, if debt is not there, so it will not even bother, even if the Feds keep on raising the interest rates, only the sales would come down. Correct me if I'm wrong, sir.
No,
I
sales will not
really
come down. No, no, wait. The companies which have no leverage are the quality companies. They have a great cash flow generation inside. They always find an opportunity to increase and expand their market. For example, let's say, for example, Tolaram in Nigeria. Tolaram is a great group in Nigeria. Do you think 10 years ago Tolaram used to sell something and today they are doing the same thing? No, they are building a port now. Reliance, which used to basically only be in the oil business and the plastic business, today they are sitting and controlling your data services. They are on the, so please understand the companies who do not have debt. That's one quality of them because they have a huge internal cash flow generation. So yes, you're right. The bankruptcies are increasing right now. We are at the highest bankruptcy, but you also have the IPO coming up now. Because right now we're just beginning of the bubble. The bubble is just started and it will last maybe a year or 2 years, nobody knows. Coming to the interest rate hike, the interest rate hike is part of the whole process because Fed has no precedence of soft lending, so hard lending might happen. All this one should worry if he has bought bad quality stocks, he doesn't have a long-term view, he only wants to do timing of the market, etc. The last thing I want to tell you, out of 11 inflation hike in the history, whenever inflation has peaked, except the scenario, in the 9th scenario, market has rallied. You need for the technical analysis, I always look at a person called William Larry, brilliant guy. I always look at the old fellows who have 20, 30, 40 years of experience in the stock market. He's a trader. I'm not a trader, but even his fundamental supports a bull run.
Okay.
So that's the simple answer to your question. And let me also now, before I think you still have something to add, or I can.
No, sir. Thank you so much, sir. Believe me, like, thank you so much in terms of the fact, but in person, certainly, like, I'll actually have a lot of more questions as well.
Sure. You can
Thank you so much for your insights. Yeah.
So thank you, friends, for asking a question. I think we are just 6 minutes past the one hour, and I would like to end with a very beautiful answer by my friend Tahir Badshah, who is the Invesco CIO managing millions of dollars in India and abroad. When I asked him, are we in the early stage of bull run or the mid stage or in the last stage? And he is the one who answered saying that early stage of bull run. I understand that we all are seeing our stock portfolio daily because now we're in the bull market, because somebody said, if you're seeing your portfolio daily, we're in the bull market. If you don't see your portfolio daily, we're in the bear market. So obviously, markets are going up and they are also disturbing our mind because we are always fearful, and the fear of losing the same amount of money is double or triple than gaining the enjoyment of the gaining the same amount. I also feel, though I don't want to put a lot of head to it, but please read my next article, Bull, Bear or Behavior. It is not bull, bear and behavior. It is bull, bear or behavior. I am in the market on a daily basis. I meet a lot of investors. I can tell you that people are still very pessimistic because they're just driven by their immediate past. I remember telling one of my biggest investors that when S&P was roughly at 3,600, I told him that S&P has a 9 to 10% of a 50 years of average, 10 years of average. S&P has even a 5-year average at something around 9%. So if S&P has to achieve that average for the last 5 years from 2022, because this was the statement I gave in 2022, S&P has to at least make you 20% CAGR to 25% CAGR if it happens in 2, 3, 4 years. Today S&P has come up very, maybe a Nasdaq also, but I'm talking about the S&P here. S&P has just touched 4,400 odd level. And from the bottom, we are 33, 34% up. So all I'm saying is markets, and one of our good friend also said that in the long run, the men and the market, they will all go up. So till then, please tune up with us. Send us a lot of questions and comment. The whole idea is to educate, educate, and educate. You would have heard about salt revolution, milk revolution, green revolution. We are trying to bring money revolution. We do not want you to lose money. The paper losses are very much possible. We don't want you to lose permanent capital. We want you to grow your money double digit without leverage, without trading, and without shorting the stock. Thank you for joining me. See you for the next session next month. Have a nice day. Have a nice weekend.
Thanks, Bhuvan. Thank you so much.
You're welcome.
Thank you, Bhuvan. It was an
Sir,
absolute
do we have a
pleasure.
closing
Thank you.
statement? Do we have a closing statement?
I just gave it.
Like even your,
The best-
your fans and followers, I meant.
No, I
The
don't.
best statement, I think, Bhuvan, that right now said that stock markets and everyone actually has to go up eventually. I think
Absolutely.
that